Today, we're talking about ADUs, additional dwelling units, and how that relates to your VA home loan purchase. Lately, we've been getting a lot of people that have been looking at homes that have these ADUs. Sometimes they're within the property, and sometimes they could be a detached structure, sometimes they're above a garage. And then you look at from a city's perspective that they don't consider it a multifamily, but they allow you to have this ADU because you got a permit for it. That's the key word. But then you get taxed as a two-unit building. So there's a lot of variations. And then it also makes it confusing then when you come to the lending side, because we're asking, is this a single family home or is this a two-unit building? Why it's important for you as a veteran looking to purchase a property as these ADUs become widely popular across the country is because there's a couple things that it affects. So, first off, pricing. So, the type of property changes or potentially can change what the interest rate is for that program. So, if you're buying a single family or a multifamily, you can have different pricing. So that's going to be important. The second part, from a qualification perspective, if it's a multifamily and you meet the reserve requirement, which is 6 months principal, interest, tax, and insurance, in your account after closing costs, then you could potentially use rental income to qualify for that home. So, one is from an interest rate perspective, two is going to be from a qualification perspective. And this has come up so much that I decided to do a video on it. Now, let me share with you guys this chapter 11, which talks about accessory dwelling units, right? This is an important topic for you guys to know, especially if you're in an area that has a lot of these. So I'm going to break it down, what it means and why it's really at the appraiser's discretion, and maybe some steps that you can take to better position yourself. So let's start off, because again, this is real small print. I'll read off to the best of my ability, and then we'll take it from there. So, an accessory dwelling unit is a living unit including kitchen, sleeping, and bathroom facilities added to or created within a single family dwelling or detached on the same side. And we've seen a lot of those. A manufactured home on the side could be an ADU. The dwelling unit and the ADU together constitute a single real estate entity. That is another piece that's important to understand with these, is that typically you're going to have one pin associated with the entire property, not multiple pins. I've seen it only, in my experience, only once with two pins, two addresses, but they were joined together. It was a side by side building and they were deeded together, so they were merged. So that's important to understand. Another part is the highest and best use. As part of the highest and best use analysis, the appraiser must determine if the property is a single family dwelling with an ADU or it's considered a two family dwelling. And that's something I touched on when we first started. The highest and best use must be a legal use, right? So you have to go to a separate area. A two family dwelling must be appraised on a Fannie Mae Form 1025. So again, it's a little bit of a different form. This is why your experience can change. A multifamily normally also costs more for an appraisal purposes than a single family home. So keep that in mind as you go through that. Now, ADU valued separately. So the ADU is usually subordinate in size, location, and appearance to the primary dwelling unit and may or may not have specifically metered utilities and separate means of ingress and egress. The appraiser must not include the living area of the ADU in the calculation of the gross living area of the primary dwelling. The ADU must be valued separate as a line item on the market data grid. That is also why it's such a huge difference, because a lot of times people will say like, oh, I have this ADU, I have this rental income. I look at a lot of these days. And then we can't use any of that because it's not considered a two unit. Now the VA is saying that, look, we can't include that in the gross living area of the main home. So if you took a 2,000 square foot home, you took 500 square feet of that away from there and into this ADU, and then 1,500 into the main living area. Now, potentially, you could have a lower valued property, but where in reality, essentially, you're generating revenue, so it should be valued at more. Now, notification to the lender if more than one unit. The appraiser must notify the lender if the property has more than one ADU, which I haven't run across before. Normally, you're allowed one of them. Either, again, sometimes people put them in the basement, on the floor, side by side. All things to be considered. Next one is detached building. So a manufactured home, shed, or other dwelling building on the property which does not have a kitchen, sleeping, or bathroom facilities, or cannot be legally used as a dwelling, may be valued as storage space if it does not present any health or safety issues. So those are all things that you guys kind of need to know as you go through that journey, because these ADUs are becoming vastly popular, like I mentioned earlier, and we've come across enough of them to warrant a video. So make sure you guys hit the like and subscribe button, and I'll catch you guys on the next video.